All right. So if you're out there joining us online, just as you can see on the bottom of the screen, if you're out there on Facebook or LinkedIn or YouTube or wherever you're watching this, feel free to comment live while we're still live streaming, and we'll try and answer your questions. And if not, feel free to comment after. We can engage with your questions after the live stream and everything else. And for those of you that are in the Zoom, if you have questions, feel free to just unmute, ask away, interrupt away. Before we get into interest rates here real quick, we are going to actually be seeing a really cool presentation of a custom GPT that Eirik built, that if you are in a real estate professional, this could amazingly save you a lot of time and effort. So I'm going to just let it loose. Eirik and Lee from Nations Lending, take it away.
What's up, dude?
No,
sorry, I've been
dude.
running around today.
These are perfect.
Yeah, this is right.
Yeah, I don't know if I mean, we have a laser; it should still work, but because like they're different inkjet, whatever. But we'll give it a shot.
Okay,
I just used some the other day. I would be dumbfounded if the paper really matters all that much for our machine.
They said,
Oh, I can turn that off. No. So I probably should. Let's see. I should probably. I'm trying to think here. How can I?
this is nice. That's a little.
I want to listen. That's yours.
Huh?
That
was mine?
That's your swag bag, dude.
Hell yeah. This is sweet.
Check out all that shit. There's a bunch of stuff in there.
Yeah.
That's an XL. It's all I had.
No,
It'll shrink up and probably be great.
Dude,
There we
this is
go.
perfect.
That's an XL. It's all I had.
No, it'll shrink up.
Oh, that's not supposed to be on.
That's an XL.
It's all I had.
Is it me? Those are my gun.
I was able to pull online. Obviously, for you, when you're putting a listing together, you have a bunch of information. You can just put it into a Word document. I don't know how exactly you guys set that up to upload to MLS, but whatever you have there, you can just upload straight away into here, and then it'll tell you, or then it'll read off the sheet and tell you. Light and bright, as brief as possible. I spelled possible wrong. Apologies for everybody else watch me try to type. And no, the hell's going on here? No specific author in mind. So you can, if you have a favorite author, somebody that you like how they write, you can actually tell this to write just like that. So it's going to analyze everything, and then it'll spit it out. And the important part is, if you don't get what you want, to go back and tell it that you don't like it and to refine it. So obviously this is already a little long-winded. So when it gets done, we're going to tell it to shorten this up into one paragraph. Unless you, obviously you like this, and then you could use it. Does anybody have any questions? I'd say there's 4 or 5 people on here. Anybody have any questions about how this works? It's all free to all of you, by the way. And Dan has a link for it. He can send. Property Shakespeare, yeah. No, nothing? Okay.
So as this is working, I think one good question to ask the group, is this something that you would feel of value to your job role? Now, granted, it's not going to be something that you're going to learn and understand right away. You have to practice with it. You have to play with it to kind of get it to work for you. But as a whole, do you think that this is something that you'd be interested to play around with? And I know I'm just trying to buy some time here as it keeps typing, but you know, please let us know what your thoughts are and how you think you could utilize this as we go through it.
Yep.
Yeah, it's got great value. I mean, you got to proofread everything before you do it, in my experience so far, playing around. But I mean, the hashtags alone are something I struggle with, and that adds value to me.
For sure. So I think as sort of a best practice here, you saw what I just did. It came up kind of long with some bullet points on here. Forget the SEO stuff and the hashtags. Just the description itself was kind of long, so I just told it to refine into one paragraph. And you can see that it's this next paragraph here. It's condensed it all into one. So something that you can put on the listing straight away. You can tell it to be as bold or as meek as you like. I oftentimes when I do this, I'll tell it to make sure that you write it so that everybody wants to come and visit. And I think the output on that tends to be a little bit better. So I would ask you to everybody to get a copy of this and play with it. And if you can give us some feedback on it, that'd be great. Any refinements and feedback that we can get is only going to make it better. And criticisms are certainly welcome about this. We want to make this the best thing possible and most useful tool for all of you. So just let us know. All right. Okay. Okay. Anybody else have any questions about this before I turn it off?
Why are you such a nerd?
And if you have a question that pops up later on, we can always just bring this back up. So
Hey, how about like a good question like why are you such a nerd? You know?
I mean, I can't answer that, Dan.
Oh, all right.
Somewhere in my genetic code. There's
Oh,
also a
man.
nerdy answer.
you need to do that. There you go.
Awesome.
All right. Well, one of the other main things that we want to talk about today are rates and kind of dive into it, answer some questions that you have as well as we go through this. So the reason why we're bringing this up is when we did a survey a while ago, rates were one of the most important things or one of the top topics that people had questions on. So we have a list of some questions. We're going to kind of do like an interview type situation. So I'm going to ask some questions to Eirik, and Eirik's going to act as our professional here because he is a professional just like myself. But sometimes it makes it a little bit easier than somebody talking right at you. So if you have questions and you are here on the chat, throw them into the chat. That would be greatly appreciated. Oh, look at that.
Cool.
Hey.
Okay. Okay. All right.
So teamwork. Thanks, Dan. So what we're going to do is just kind of give an overview of what rates are. So we may all know that there's different types of rates out there when the like consumer rates, mortgage rates, these different types of rates. We also hear the flashy terms out there of the Fed rate. So the Fed rate is really important right now because all indications of what the Fed has been saying is that they are anticipating lowering the Fed rate. As you know, last year the Fed rate was raised. So I'm going to ask you, Eirik, can you talk first of all just about what the Fed rate is, and kind of give us an overview on that?
The Fed rate is quite literally is the rate at which banks purchase money. So the money supply from the Fed, banks purchase money from them on a daily basis. And so in the morning, they put their order in for how much money they need. And at the end of the day, they sell the money back to the Fed. So right now they're selling money at 8.5%. So you see mortgage rates, which typically don't have, the Fed rate doesn't typically have a bearing on this, but over the last 2 years it has, because the Fed rate is so high. So the cost of capital, the cost of buying that money is exorbitantly high compared to 2 years ago.
Right. So when if the Fed comes out and says, hey, we are going to lower the Fed rate by 1/4 or 0.5%, where can consumers and where can people see the direct impact right away with that lowering of a Fed rate?
Are we saying where can we see the impact in mortgages?
No,
Just in general.
overall, because ultimately,
That's a good question.
Yeah.
So you'll see things, you probably won't see it in mortgage rates right away. You will see it in things like buying a car. Interest rates on a car will be less. Credit card rates, you'll see that right away. Home equity lines, which is a huge one. And I mean, I'm subject to this as well because I took out a home equity 4 years ago and I was paying 2.25% on it. And in 6 months, it went from 2.25% to 8.5%, which it quadrupled my payment. And that is where a lot of people feel that pinch, especially current homeowners, and why, quite honestly, a huge chunk of why a lot of them don't want to sell, because they're equitized, maybe at a low first rate, but now they have this thing that they can't get rid of. I know it seems counterintuitive. It's a high rate, let's get rid of it, but they're not going to do it.
So just to reiterate, when the Fed does lower a rate, it seems like it's going to affect consumer loans the fastest. Yep. How soon or what type of impact will that have on mortgage rates? Will it be a direct correlation? Will it be a trickle-down effect? Kind of what does that Fed rate cut look like towards mortgage rates?
Yeah, mortgage rates are, so the effect that you'll see is when, so I'm going to call it the cost of capital, the cost of banks borrowing money. When that drops, you will see investors, you'll see investors jump back into the market. So mortgage rates are actually based on two variables. One is the buying and selling of what's called a mortgage-backed security. So it's on the open market. Mortgage-backed securities are collections or securities of millions of dollars worth of mortgages at once. And they're sold on the open market. And then the 10-year Treasury yield is the other metric, and you want them to be diametrically opposed, going up and down. If they're doing that, then things are working as they should. Right now, because the cost of capital is high, you see people running from making investments in securities, because securities are sort of a medium risk, medium reward investment, and they're putting it into safe money. So if treasuries don't move hardly at all, and if you lock it in right now, like a 3 or a 2 year treasury is at 5%, so you're getting a guaranteed 5% rate of return, and a mortgage-backed security, you might actually lose your ass on. So nobody wants to invest in them. Nobody wants to invest in them. Interest rates are high. So when that Fed rate comes down, that sort of money frees up a little bit. Is really I could have just said that.
No, it's good. I think having a little bit of the background for somebody who's not in the industry, it can be very beneficial to hear that. So when we are, if I was a realtor, or if I'm a professional outside of the mortgage world, I see all of these different flashy rates out there. I see advertisements online saying, oh, I can get this rate. and I can go to this other website and their rate is so much higher. Can you talk or give us some insight of how there's a difference between banks, credit unions, IMBs, brokers, and how they essentially set their pricing and why it can be different?
Variable.
Yeah.
Well, there's a lot of factors to this, so we'll keep this as simple as possible. So first and foremost, everything that you see online as far as interest rates, I shouldn't say everything, but the vast majority of what you see online is complete and utter bullshit. Those are called teaser rates, and teaser rates are meant to get you to apply. That's it. They have no legal obligation to tell you the truth about what interest rates are, because if you're not locking in a loan today, it doesn't exist. So lenders don't. They just tell you what you want to hear so that you apply. What was the second part of this question?
So how do institutions set their pricing?
How to set pricing, right? So financial institutions or depositories, they leverage their deposits and they get what is called a wholesale line of credit from a financial institution. So that could be a bigger bank or a hedge fund or a holding company. And so what they do is they say, we're going to sell our loans today at X. And then they close the loans and they put them onto there. And then usually they run about a month here. So you buy the money at the beginning of the month and you sell at the end of the month. And they would do what's called portfolio lending. So they put all of those loans on their books. And then at the end of the month, they sell them to the investor, Fannie Mae or Freddie Mac. So when you do stuff like that, it's called a forward commitment. And a forward commitment is when you buy a whole bunch of money at once. Now you can buy a whole bunch of money direct from the investors, so Fannie Mae and Freddie Mac, Ginnie Mae, Ellie Mae, they all said, you can buy all of them. Forward commitments or tranches is the other way to say it. You can buy all that from them directly, but like right now, when the rates are so volatile on a daily basis, the banks just tend to portfolio that money until they can put it where they wanted to put it. Mm-hmm. Whereas people like us and like Fairway or Guild or any of these independent mortgage bankers, where we can't do that because we don't have access to that same kind of capital. So when we do it, we have to do what's called best efforts, and best efforts means that we ride that wave of interest rates up and down on a daily basis. And so what we do is we watch until we think it's positioned in the best possible spot, and then we lock them in interest rates. So it's a little more work on our part because we do have to pay a little more attention. But more often than not, people get a better go of it because we're able to do that. And brokers, so you asked about brokers too. Brokers are a completely different thing. Brokers are subject to all their lenders because they're independent contractors, and so their interest rates are all over the place all the time. And so again, some of it's on tolerance too, right? So maybe one investor today says, I'm going to undercut the market, and then tomorrow they're like, I don't want to do any more of this. And that happens all the time. It's really, really fickle. So everyone has its good parts. Everyone has its bad parts. Just sort of depends on, your client's risk tolerance, for what they want to do. If they want something really super steady, your bank might be the way to go. But if they're willing to ride it a little bit and potentially get a better interest rate out of it, using an independent or a broker.
Awesome. Again, for the people that are out there, if you do have questions that you would like to ask, please just pipe up and ask. Type it in the chat function. We do have that pulled up here so we can see if you type something in. Again, we want to make this for you so you can get information off of that. But while we're waiting on questions, the one thing that I would ask Eirik is, can you talk about what points are? So that's the flashy term that a lot of people hear about, but don't necessarily know what points are. So can you give us a little overview of what points are when we're talking about interest rates?
When you buy what's called a commitment, so when you lock a loan, you are buying an offered rate. So Fannie Mae and Freddie Mac, let's just use them. So they're like, today the interest rate is X. And to buy this interest rate from us, you have what are called standard adjustments, or points. Is a short for limited liability points adjustments, is what Fannie and Freddie call it. And those are guaranteed portions of the interest paid up front in order to get the rate that they're offering on that specific day. So if you go to a place like UW or Summit or some of the banks, they will give you an interest rate and then charge you the points, because one way or another, Fannie and Freddie have to get paid for that. That's their price. So they just pass along the points charge. Typically, what we do for something like that is we don't make you pay the points, but your interest rate is slightly higher to incorporate paying for those points. 6-1, half dozen another, right? You're going to pay for it one way or the other. In a market like this, that's a short-term market, because we are going to see interest rate cuts and they're going to come down. To me, paying points doesn't make any sense, because once you pay those points, that's money spent. It's a sunk cost. So save your money now, pay a little bit more in interest, but the incremental difference in interest is still going to save you way more money than paying the upfront fees. Typically, I shouldn't say that 100%, but 85% of the time that's true. Now I got off. What was the?
So think about like when would be a good example for somebody to buy points?
If you're planning on being in the house, it's so like 20. If you were this is like 2020. And we had that refi boom, and interest rates were at 2.5%. I mean, I had people spending $20,000-$30,000 in points to get their interest rates down into the ones, right? But they're never going to sell their house, and they're never going to get rid of that mortgage. So, is paying 30 grand worth it? I don't know, or how long, where the break-even is on that. But to me, it's once you think that you're going to be in that for a long time and not going to make any financial moves, that is the time to pay the points. So if you buy a house now at a higher interest rate and you refinance, when you refinance, if you want to pay points, that's a good thing to do. You're going to position yourself better because you're going to have longevity in that house. Does that make sense?
Yes.
Does that make sense?
Out to the crowd out there. I see a lot of people nodding their head with their blank screens. So yes, I'm going to take that as a yes.
Yes, and do you have any kind of a graphic? Like lately I've seen negotiating the price on a 400,000 down to 390, or the same property paying 400, getting 10,000 credit from the seller and applying that towards points.
Yep. Yeah.
So the seller nets the same, and that 10K. Do you actually like have an actual number, because the savings used to buy down may or may not be there?
Can you clarify the question a little bit?
Sure. I've just seen like other agents nationwide posting a $400,000 purchase.
Yeah.
Instead of paying 390, they're side by sides. The monthly payment at 390, and then the monthly payment paying 400, using that 10K towards buying down. So that way the seller still is netting, based off that 390, but for the buyer, their monthly payment is, XYZ versus XYZ.
Yeah. So is the question is like, when is it worth it to do that?
Yeah. I mean, I obviously, because the points cost different all the time. So that 10K buying power probably is the factor that changes that.
Yes, exactly. So a point, so let's make this super simple. In the vernacular, a point is one point is 1% of the loan, right? So if somebody says, oh, I have to pay 2 points for my interest rate, that means, whatever purchase price minus what they're putting down as, 2% of that would be what they have to pay up front. So sometimes like getting 10 grand in a general sense will pay all your closing costs and probably buy you a few points to knock your interest rate down slightly. The margin on those points changes on a daily basis. I mean, there are some standard points, and it's all out on the internet. If you can go you can look up Fannie Mae LLPA matrix. It'll pull the points up, the standard points. Those do shift a little bit as well. But I think the best thing you can do, Bill, is like if you have a question about it specifically on a specific loan, is just call a lender, call one of us, and we'll walk you through it.
Excellent. Thanks.
Yep.
I had a thought to go along with that. Now I'm drawing a blank.
Points, percentage of loan.
Yeah. But there was, I think, in Bill's scenario, I think there are some things to think about that. Like if a seller is giving a seller credit to the buyer, is how to utilize that within the transaction, which is going to be best for the buyer. So if it's saving and paying all of the closing costs and then not using it to buy the points, so then they can essentially keep more money in their pocket at that point. So then when it's time to refinance, then they can take that extra money that they saved initially because they didn't pay those closing costs and apply that to buying the rate down at the time of refinance, is a way that that can also benefit benefits people. So that I had two scenarios just this past month where we had that. It was with turnkey builds and the benefit that Viridian was giving us for people who closed during the month of January. They were offering a certain amount of credits to the buyer, and so we had the conversation. Does it make sense to do a temporary rate buy down, a permanent rate buy down, or use the funds to apply towards all of their closing costs and then use the rest of it to buy down their rate? So there's different options when there is a seller credit out there that we can work with the buyer to use. It doesn't necessarily have to be put directly towards the rate to buy it down. So that's one more tool that's in your pocket. That's the Teams message that you just got. Okay, so let's dive into more of rates questions. I know anybody else have any thoughts out there
Nothing.
that you are seeing that you might have a question on?
Nothing on the social channels. But I know one of the questions, like Lawrence Yoon or whatever would, said, oh, there's going to be 3 rate cuts this year. There's already been 1, but most other people are saying there's only going to be 2, and stuff like that. Like, I don't know. You guys don't have a crystal ball like anybody else, or anything. But what do you guys have any? I don't know, additional predictions or anything else that you want to share?
I do think there'll be 3 rate cuts. I do think they'll continue to work on that. I don't think they're going to be until probably end of second quarter is when we'll see the first one. I don't know. This is all at this point a politics game too,
Yep.
Which is unfortunate. Because you see the Fed minutes came out and they said we're going to hold right now because the economy looks strong. And then Jerome Powell goes on 60 Minutes. Jerome Powell, by the way, is the Fed chair. He goes on 60 Minutes last weekend and says, like, well, we'll have to see where things shake out on whether we're going to cut rates or not, even though they already said they're going to cut rates. So it's this constant back and forth and rhetoric from them, depending on really what the government, the overall arching government, wants them to say at that point. The reason that we saw a big rate for a while, we saw a rate cut, not an official rate cut, but we saw the market cut, is because the Treasury got sick of the Fed, and Janet Yellen came out and told them they're cutting rates, even though they weren't going to do it. So we all know who really stirs the drink, right? It's not Jerome Powell, it's Janet Yellen. So if Janet Yellen and comes out, which I assume is going to happen, especially because we're in an election year, and both parties always do this in an election year, they're going to come out and be like, "Oh, free money for everybody, rate cut, rate cut, rate cut."
Sure.
Right?
Do you feel with it being a year like that, are there, I know in your guys' experience with previous election years or anything else, like, is there a more particular time to be watching for excessive movement? Like that's almost a seasonal thing or a cyclical thing for an election year? Or is it kind of just up in the air depending on who's barking and who's talking and whatever?
Well, my 2 cents on this is taking it from a political view rather than the mortgage view, is how do you get you the biggest bang for your buck? So if you are thinking that you want to get 2 rate cuts in before the election cycle, or before November, second Tuesday of November, first Tuesday of November, excuse me, I can't even remember what election day is. A politician or something is going, like the Fed cuts aren't going to be direct impact. So you want to make sure that when that happens, think about like March, April. Okay, if it's cut at that time, the people in society won't probably feel that until May.
It's about a 90-day lag.
May, June. So okay, that starts getting people money in their pocket. They start seeing things be a little bit cheaper. Okay, well, if they're going to do another one, it's probably going to be around that September time. So then they're feeling it right before people go to vote. So on a political side of things, that makes a lot more sense.
Yeah.
To do cuts in that way.
That
But
was
on the mortgage
exactly
side of things,
that was exactly
Go-
what the answer I was looking for though, is like, you know, because I mean, yeah, it's probably what I mean, it's not exact science, but it's probably a 70 to 90-day lag, right? You know, somewhere in there. And I think that's the hard thing is for agents then to convey that message to people, because they see the news, because they'll make big news about a rate cut, and everybody assumes in a digital world that it's like, oh, they cut the rate's cut, so it's done, you know, like it's already there, you know, or whatever. And I feel like that's always been a bit of a struggle, you know, obviously when people are waiting for something to happen versus like anticipating it because it's going the other way. For instance, like, oh, I got to go now because the rate's going up, versus obviously now I'm going to wait until the rate goes this way, you know. And yeah, anyway.
the biggest thing that I could to say that, and I think everybody knows this, is if my buyer is waiting for those rates to drop, everybody else's buyer is waiting for that rate to drop. So once that happens, boom, you have a huge influx of people, and now you're writing offers that have 25, 30 offers you're competing against. So it's pretty much a wash in the same thing. So I always like to tell people, I said, don't worry about the rate. The best time to buy is when it works for your budget. And that's one of the main things when we are working up a pre-approval or having a conversation with somebody. It's all about their budget and what works for them. We are going to be conservative pre-approving them on a higher interest rate in case rates go up. But if rates go down, that just increases their buying power. But as long as they qualify and they feel comfortable with that monthly payment, they can go ahead and move forward. The rate is temporary and can always change. The house is the permanent thing in the situation. So what's more important, to have a low rate or to have the house that you want? So I think it's really kind of putting that perspective into people's minds. And we get creative. There's things that we can do. There's programs that we can work with to get people in, even if it's at a short term, you know, they can refinance in 6 months, but then they have that property and can start living their life and moving forward with that.
And just to piggyback on that too, I have experienced this over the last couple of years, right? Is lenders want to make this a race to the bottom all the time, because for most lenders, that's how they get their business, is by being the cheapest. But for real estate agents, if you want people to not buy houses, make it about the rates. That's just the truth.
Right. No, I get what you're saying. And honestly, I think that's where I was going with this, is the advice to people and agents in general is to stay in their lane, right? You know, from that standpoint, and don't make that the primary source of the conversation, because as to both your points, it's not the most important. It's never been the most important. And if you're buying a home, you're not buying a home because you plan on being there for 6 months. You're buying a home because you're going to plan on being there for whatever, however many years. And there isn't a 10-year period of history in the history of owning real estate in this country where you lose money. So as far as from that standpoint, I get it would be great to have sub 3% mortgage rates again, but it's not happening. So cool. I don't see any other questions on the chat piece. I'll leave you guys with this. Anything you're looking forward to personally or otherwise in the next month that you want to share?
Is that anybody or to the two of us?
You two. Do you have anything you're looking forward to? Anything personal that you want to share so that people know who you are? Who's your favorite band? You know, something like that. Anything?
Well, I will definitely skip the favorite band part, but a little bit of the pre-conversation that we had before jumping on. You can see I'm wearing a hooded sweatshirt. I literally just came off the lake this morning ice fishing. It's something that I used to do as a kid. I got away from it as I went into high school, came to UW-Madison for college, started my career, and within the past year, I've just really gotten back into it, and
Awesome.
It's a lot of fun. We're very fortunate that we have the lake systems and the waterways that we do here in the Madison area, and for the first time in my life, I ice fished a place in Madison, which was Monday, and I've been out 3 times since because it's just so much fun.
Yeah.
We've got a great fishery here and catching lots of bluegills. In a less than 2-hour span this morning, I caught 35 plus fish.
What a blast.
It was just fun.
Fun.
Yeah, I was out on the water by 7, and then I
So by
set
fish story standpoint, like it was 22 to 27.
Yeah, no, actually,
joking.
I'm serious.
I'm
This
joking.
wasn't like the size thing. This was, I need to get an actual like clicker.
Yeah, right.
because
So that you
You
know.
catch so many, and then it's like, wow. But
Awesome.
that's a passion of mine that I really look forward to. And then also as the weather warms up and the ice disappears, really looking forward to getting out hiking the trails and getting on the softball diamond and playing some ball again.
Heck yeah. Eirik, how about you? Anything you're looking forward to other than
Yeah.
work?
Other than work, I mean, that feels like it's all I do, but I'm looking forward to this afternoon. We are actually Thinking Prompts, which is our other company. We're AI implementation company that we do. We're giving a speech or a presentation this afternoon at 1:45 at the Fairway building in Madison. It's on Biltmore Lane. If anybody wants to go, if you're not signed up, come and learn how to use artificial intelligence to help the business. I'm really excited that this is starting to pick up and it's gathering some steam, and not just within the real estate market, just in general.
Yeah.
As
Great
you
plug.
know, nobody knows what it is.
Right. Well, and
They
great
think
plug. And
that they
I'm
know.
like, I know that is a personal passion of yours. And obviously, if you watch the beginning of this video, that GPT, hey, if you want any of those resources, certainly just make a comment below too, and we'll send those off to you. And then also just, yeah, if you want to go ahead, please, look up the Nations Lending team here. You guys can Google Lee or Eirik, and you're going to find them all over the place. And also, if you go to thinkandprompts.com, you can see what he was talking about. If you have a company out there that needs to learn about AI because they're already way behind, which we're way ahead, and we already feel like we're way behind. So let's see here. Jimmy, yes, more info on the AI, please. And Bill, yeah, I don't know if you can make it down this afternoon or not. I will definitely post. Let's see here. I'll send you guys individually the link to that. But if you go to the Mortgage Bankers Association, Madison area Mortgage Bankers Association website, I believe that it's on there.
You can get there through Rascal as well.
Yep. And if you, head over to the Rascal Realtors Association of South Central Wisconsin website, you can also find the info for that AI class on there. Jimmy, we'll see you this afternoon. And thanks again, everybody, for attending. Eirik, Lee, you guys are amazing. Thanks for the info. Thanks for the time and everything else. Appreciate you.
Thanks,
Awesome. Thank you.
All right. Peace out, guys. Have a good day.
Bye.
If you are still on the stream, again, go ahead and comment below. If you need anything, we'll get back to you. Have a wonderful day.